welcome back. You're tuned into Your Trades on ET now. Well, let's take a look at what the cues are coming from the world of derivatives in a segment called Derivatives Diary. And it does look like on the Nifty, we saw some sort of short build-up in trade today, given the fact that index ended just around that 17,500 mark. On the Bank Nifty, however, there was quite a bit of outperformance, and you can see the derivatives cues suggesting that there was a long build-up on the counter. Separately, in terms of the levels that we are tracking, we saw some active call writing happening at the levels of 17,600 as well as 17,700, telling you that there is a bit of resistance coming in at around that 17,700 mark. In terms of the put levels, well, we are tracking the fact that put buying has happened at 17,500 and put writing has happened at 17,400, telling you that there is a bit of near-term range near-term floor when it comes to the levels of around 17,450 thereabouts. In terms of the individual counters, we saw some long build-up happening on the likes of PVR as well as Astral Pipes. PVR was active quite a bit in trade ahead of the big release which is lined up over the weekend, which is KGF2. So that was the reaction you saw on that counter. Short build-up was visible on Birlasoft as well as UBL. Birlasoft was definitely active on account of the multiple block deals that happened, and there were heavy volumes on the counter, so keep that on your radar as well. Separately, in terms of long unwinding, we saw that happening on the likes of Delta Corp as well as Chambal Fertilizers. Delta Corp came out with its numbers, which were a bit disappointing as the profit has declined 31% quarter on quarter, and you can see the reaction when it comes to the F&O space as well. So those were the big cues coming in as far as the derivatives world is concerned. But what was the big story of the day was, well, it was the fact that the metal stocks were losing their sheen as far as the trading action is concerned for today. We saw aluminium stocks correct quite a bit, given the fact that aluminium prices have been correcting since March 17, and we have seen that the prices have reached the 3-week low level. We have Asesha joining us to tell us all those details. Hi Asesha, take it away.
Nifty Metal was the biggest sectoral loser in today's trading session, and amongst Nifty Metal stocks, aluminium stocks were the most impacted. Hindalco, Nalco, Vedanta were all down anywhere between 3 to 6% in today's trading session. And this was because aluminium prices on London Metal Exchange fell lowest in 3 weeks. They were down almost 13.7% as they came in at $3,250 per ton, and this was the lowest level that they have seen since March 17. And the reason for this is that COVID-19 led lockdown in China is raising concerns over slowing demand across the globe. It is important to note that aluminium prices on London Metal Exchange touched $4,000 per ton at the top of Russia-Ukraine crisis, and that's when these stocks rallied quite a bit. And now with cooling off of aluminium prices on London Metal Exchange, perhaps some bit of cooling off is what we are seeing in aluminium stocks as well. But despite the fall that we have seen, aluminium stocks have in any case run up quite a bit, while Nifty has given no returns year to date. Vedanta is up 20%, Hindalco is up 15%, Nalco is up as much as 16%. And now with declining prices, perhaps some cooling off is what we are seeing. Also important to note that since during the whole of Q4, these prices were up, aluminium prices globally were up. Q4 is expected to be good. However, with now, these prices cooling off, Q1 and later of FY23 will not be as great.
Thank you, Asesha, for that. Well, yes, metal pack was definitely in focus, but the other space that we are tracking is some of these food and agri companies. Remember, SkyMet also said that this time around there's a 65% possibility that we are looking at an average monsoon, and they are expecting a 98% average monsoon when it comes through this year itself. And on back of that, we have also seen quite a bit of up move on a lot of these rice stocks. My colleague Sharad is standing by to tell us what are the key triggers for these counters to see the kind of up move that they've seen over the last few sessions. Sharad, over to you.
Well, the rice stocks are in focus today. KRBL and L&T Foods, both stocks have risen between 7 to 15% over the last 3 sessions. And today's volumes itself have been very strong, with KRBL's volumes coming almost 7 times its 20-day average. And even for L&T Foods, the volumes have been higher. Now, the buzz is that the data has come that India's basmati exports has risen for the 4th straight month itself. And if we see your rice export utilization for this segment has also turned positive for both January and February. Over the last years itself, it has been negative. Now going ahead, if you see the data itself, the record exports have been coming in for almost 3.94 lakh tons for basmati exports. And even the export realization, if you see, calendar 19 had almost 12% and calendar year 2020 had almost negative 26%. But now This has increased for both January and February. And the top three regions for exports include your Gulf region, especially Saudi Arabia and UAE. Apart from this, USA and UK markets are also there. Now, the Indian rice stocks are in focus because the traders are actually betting that rice can be an alternative because of higher wheat prices coming in. Apart from this, a strong inventories are also held by the Indian rice companies.
Thank you, Sharad, for that. But during the trading session, we were also tracking what was happening with TCS, given the fact that the company reported quite a stellar number when it comes to deal pipeline at $11.3 billion. We spoke with the management. Let's hear out what they had to tell us.
It's quite encouraging that we are well and truly into a normalcy period from overall execution and demand.
We are pleased with the kind of pipeline that we have, and the overall for the financial year ending FY 31st March, $35 billion plus as the order book. That augurs well for our growth aspirations and growth ambitions for FY 23. And as we are typically, we have been clocking about $8 to $9 billion of order book every quarter over the last few quarters. And I think that's something that we are focused on, we are comfortable with, and we hope that we will have one or two mega deals during the coming year, so which will also bump up that number to about a little over $10 billion in some of these quarters. So